Hello and a warm welcome to my channel. Now, before I go into the derivative data of today of all the participants, let's talk about what happened yesterday as we were closed on account of Holi. The Fed chairman Jeremy Powell gave a statement which spooked the markets. The US market started correcting very deeply, and Singapore Nifty, which was trading at 17,850, the high of Tuesday, March the 7th, started cracking, went down to 750, and today morning was trading at 17,700 as we opened at the lower end, but then there we bounced back to close at today's high. So what we have basically from a layman's point of view, what we saw was immediate buyers coming into the market in the lows today to push it up. The selling pressure was missing today. After that, it consolidated, but it continued to rise. Will that happen tomorrow? Let's try to decode how the data has played from here onwards. So in the future data, we can see the FIIs did some fresh shortings today in the index. So in the recovery mode, they were still selling today. They continued to uh, sell today. But compared to the other days, this is a small quantity of shorts taken by them. Very little from the domestic institutions. The prop desk, remember, on Friday close, they had 24,000 contract short. We are now down to 9,000 contracts. So the prop desk is continuously covering its shorts and adding longs. So this desk looks like, at least in the future trading of segment, their analysis is that the downside looks limited to them as they keep covering they're buying the dip non-stop, even the rally, they've been doing that non-stop. The clients had an equally divided day, some bullish and equivalent some bearish. So net result, not too much from clients. The divided house stands equal out there in the current juncture in the index futures. Now in the options, the call put from the FIIs, slightly, very slight change of ratio of 1 from 1 is to 1 to, still standing at 1 is to 1.5, uh, much better than yesterday from a bull point of view. This is a good quantity addition. You can see lots of calls added out here. Lots of, and there's an equivalent amount of call put long and short. So maybe some spreads done out there. But good point. The ratios coming down, and they they seem to be not so bearish in the option side right now. Uh, Domestic institutions, I'll come to that. The 800 put by uh, the prop desk. Now, remember, they were almost neutral on Monday close. Today they have gone. They think the top may not be made, or maybe not very far for tomorrow's expiry. So they've gone with a mild short out there. But look at the heavy shorting in the put side them. So today, particularly today, it's the prop desk which was continuously shorting puts uh, as the market moved up from 17,625 to 17,750 towards the close. So these are the people shorting. And if you look at the data, you get an idea of where the put OI additions have been taking place. So it's them who are doing it clearly. The clients, on the other hand, have turned slightly bearish. Definitely not bullish. They see the upside cap, double of the prop desk short there. And they've also gone into a mild long in the put side. So maybe these are for tomorrow, the people who think there'll be a weak opening, or, buying a cheaper put, the kinds, zero or hero kind of put buying could have taken place. Probably that could be next week. We'll have to decode that later. But this is quite surprising to see. Normally, we see a complete contra between the prop desk and the client desk. Here, the props are writing heavy, and the clients are buying puts. It's usually what we have seen opposites happening in the market, but now we're seeing this. Interesting to see how things will progress on tomorrow's expiry. In the stock futures, Very little change from FII, some stocks long, equivalent stock short, nothing changing out there. Now look at the DIA figure. That's why I said I'll talk about the DIA index option a bit later. This is massive short covering from them again. But what have they done? They've covered future shorts, but they've sold stock calls and they've bought index puts. So some kind of hedge taking place out there. But in a sense, this is again a bullish signal in that they feel that there could be more upside in a stock. So instead of risking an M2M on the future side, or where they feel a bottom has been done in a stock, they're shorting calls and buying puts of the index as a hedge in that case because they hold a lot of stocks in cash segment. So covering they are securing their trades like that, not through future shorts, which means that they they feel that the downside is not there so much there in at the moment in that juncture. Now the prop desk uh, in the stock futures, some shorting, in fact, double shorting from the longs they did. So some reduction coming from them there. Similarly, from the clients, for every one stock future long, three stock futures short. So they've been adding shorts out there. The clients are definitely bearish at this level. It looks like that way. Stock calls and stock puts, not too much of a change, just that the prop desk has gone with a slightly bullish one, and the clients have gone almost neutral on the that segment. The FIs have also gone with a bullish look out there. So overall, FIIs maybe in stock futures some mild short, but they are looking at a slight bullish tone out there. Prop desk definitely looking at the market from a bullish angle, while clients going slightly bearish from here onwards, slightly bearish. But for tomorrow's expiry, 17,825 is a resistance. But if market starts sustaining above it beyond 9:45, 10 o'clock, then it won't be surprising if it even tries to test 17,900 tomorrow itself, because at 825 wall, if managed to be broken and sustained above, could give you a sharp move. While on the downside, 17,600 is a strong wall near about just below today's low, 17,700. If that fails to hold, then 17,525 is the next big wall out there. Most likely, if the 800 wall on the upside is not breached, we could have a range bound expiry between 17,750 to 17,800. With that, I end today's market analysis outlook of the derivative data. Have a great settled weekly expiry, everyone. Bye bye.